right, can I get a quick mic check, please? Mic check. I want to make sure I'm not talking to myself. All right, good afternoon, traders. It is March 21st, Thursday, 2024. A definitely subdued digestive type of session today. S&P 500 futures up 21, 5307.75. We held on to that 5300 handle. 5300 handle for dear life. Nasdaq futures up 98.25, 18,578. Bitcoin down 25.64 at 65,309. Crude down 0.42, 80.85. Silver down 0.175 at 24.93, and gold 22.50 up 22.50, 21.83.50. The 10-year currently flattish 4.270, and the dollar wild moves today, and the DXY off the open. You can see this very aggressive angle of ascent, massive retracement into yesterday's highs. Currently 104.024. So the market, had a beautiful overnight continuation in the futures overnight. The FOMC fueled rally, bringing in another day of gains. The today's close left the S&P up 0.3%, Nasdaq Composite up 0.2%, Dow Jones up 0.7% at fresh all-time highs. The Russell 2000 outperformed all the major indices, longing in at almost 1.25% gain. The the S&Ps and Nasdaq closed near the lows of the session, though. We had a sizable decline in shares of Apple today, following news of a Department of Justice antitrust lawsuit alleging the company had blocked software and gaming companies from offering better options, aka doing their job. Apple said they will vigorously defend themselves. Godspeed, Apple. The loss at Apple we also had Accenture with a sharp decline, down almost over 9.25%, limiting some of the upside movement in the S&Ps today. Also weighing heavily on the markets was a strong, almost full retracement of the dollar in through the 104 handle, and unyielding pressure from the 10-year and the 2-year, which definitely left equity investors asking unanswered questions today. We did have some strengthening semiconductors today, offsetting some of this pressure. We had strong earnings and guidance from Micron up 14.1%, and Broadcom up 5.5%. So definitely winners in that space. Cowen coming out with upgrades to outperform from market perform from Cowen there. So it was a tricky session. The market breadth for the most part was actually pretty decent today. Advancers led decliners 2-1 on the NYSE and 3-2 on the Nasdaq. 9 of the 11 S&P sectors today again closed with gains, led by industrials and financials. Utilities and communications both down about a quarter percentage point. We had some IPO buzz, as they say on Reddit. And I jokingly said, one of the greatest pleasures in life is shorting a stock is an actual piece of crap. Unfortunately, I didn't get a chance to do so. We opened at 47, and they proceeded to sell the absolute snot out of it. RDBT. There it is. I need a nap. So yeah, not a particularly pretty start there for Reddit. So that was pretty much the day in a nutshell. You have some days after a major move in the markets where the market needs to take a breather, needs to consolidate, test levels. I'm pleased that we came in to the day with that particular bias in mind, and really avoided the chase. Some days you can tell right away it's going to be a nice continuation day. Some days you really have to wait, let the market settle, and let the price guide you. And you can see here the day highs were never taken out. Right, you were in what looked like a falling wedge, potential snapback. You snap back one leg higher, and then the buyers just died on the vine there, and that led to basically a micro channel lower for the rest of the day. Spiders, basically no worse for the wear, but definitely you snapped out here and also channeled lower. Very orderly descent throughout the rest of the day, and market breadth remained relatively okay today. You really can't do a whole lot of complaining about breadth today given the pressures the market was in. So overall, I thought it was a constructive session somewhat. This is a pattern you never kind of want to see. I would be shocked if we don't fill the gap tomorrow, and that's okay. So this is the cues on the daily. Gap fill around 430, 443.90. Spiders 520.62, I think, something like that. The IWM, for its part, actually fared better. All eyes on this 209.80, and the diamonds, the Dow Jones ATF, actually managed to close near the highs, fueled by strength in financials and industrials. So overall, constructive session. I really not a lot to do. I took my Dell overnight last night as it traversed our key buy point right here at 109 and sold it into the open this morning for a very nice 4 or 5% gain, something like that. Right off the open when it I think it was 113.70 and 114. Nvidia, we also, it was a last minute overnight off this close. Again, I was liking, it kind of closing at the neckline. I thought there was a good chance we were going to gap up on momentum. And it died right here. Basically, this red line you see, this pivot around 123 and a quarter. 923 and a quarter, excuse me. And so that's how we started the day. I didn't do a whole lot today as far as trades. I didn't like how the market was moving. We did take Nvidia off the bounce on the closing pivot. I sold some at VWAP and then some at R2. Some of you guys actually held it all the way to my final target, which was 923 and a quarter. So if you did, good job. It was quite a move there. Got a nice little head and shoulders break there, 2-wave corrective of that. So that was Nvidia, and yeah, Tesla. We also bought off the lows for the curling wedge reversal. This one worked, but not as well. So we bought it as it came in to support, and sold. I sold most of it into VWAP, and then the last most of my last quarter into 175.64, which was the closing pivot, and then trailed out of the rest here. So decent scalp. It was a very technical scalp. You can see, obviously, we were buying the bottom of what later turned out to be obvious bear flag. At the time, you're looking for a 2-wave corrective. You flag here, you might be putting in an Angry Bird. So we don't have a crystal ball. We put ourselves in positions where we can maximize gains and protect our accounts. And so, it's a pretty well executed trade. It is what it is. Tesla just went lower with the market. But yeah, overall pretty good. Then we did our presentation today, so I wasn't able to trade the big flush in the market, but I did catch that last little break here for a cute little scalp all the way to the lows. So that was nice. And that was pretty much my day. I really didn't do a whole heck of a lot else today. and I'm glad I stuck to my plan. You know, we were looking in the S&Ps today. You know, we wanted to see a clear break of 53.21, 53.22, and we wanted to see a hold above it, and we just got no price acceptance through the level, and got, you know, dragged right back down to 53.12. So in that kind of environment, I'm really not looking to do a lot, and yeah, we proved to be correct today. Good reading of the market kept me out of putting a lot of excessive risk on today, I'm glad about. I'm glad we read the market correctly, and I'm glad I stuck with my plan. So that's the short and long of it. Let's see if we have any email questions from the team. Do I teach every day? What you see, sir, is what you get. I'm this is me every day. I don't really. I mean, I answer a lot more questions because we have a lot of open house guests, but you know, I'm sure that there's a really large contingent of full time professional traders here, and they probably just, you know, roll their eyes and cover their ears when I talk because they just want to focus on trading. But there's a lot of novice traders also who are looking for commentary and instruction. So yeah, I flap my gums all day long. What does gas station sushi mean? It's just it's just our term of endearment for something that's very fishy, very suspicious. You know, like, would you eat sushi at a gas station? I would have fear of you know, death by death by salmonella. So something you definitely don't want. So when I say, you know, I'm getting gas station sushi vibes, all I'm trying to say, in a joking manner, is that the price action looks suspect, or yeah, or you know, or that I don't feel comfortable that we have anything substantive going on. So it's a Danger Will Robinson type of signal that we affectionately just call gas station sushi. You know, you hang out with the same people year in and year out. You develop a certain banter and humor. So that's all that means. What time does the Sunday session start? It starts at 9 p.m. Eastern. I usually, you know, start a few minutes later. I try not to be late. Are you here every day? Yes, I'm here every day. Some days I have to leave early because, contrary to popular belief, I have a personal errands to attend to. Sometimes I take a longer lunch, but I'm here every day, yes. Um, uh, okay, any other questions? Let's see. A stupid question. What does, oh, you answered that one already. Alright, so looks like that's it. Okay. Review questions. Alright, so somebody sent this email. Let me copy it and paste it without the. I started shorting the T triple Qs. Okay. At 11:05, expecting a breakdown with stop being the intraday trend line. Okay. Once it was broken, I got stopped. I started scaling in short versus day highs. I still like the short because VIX and UVXY breaking through day highs. The indices being short term extended to the upside. Sure. I like the triple Q as better short because it seemed like with the weaker index on the daily, I moved my stop to 63.90 at 11:50 a.m. Candle high once price moved back to 63.65 with my first target 63.60. So you had a 2 cent target? Okay, no, never mind. I didn't get filled and got stopped out at 63.90. If I had kept on my original stop at 63.94, I would still have gotten stopped out by a penny. So should I have had a wider stop? Uh, where did you? It, it's really helpful if you're gonna send me a trade review if you actually like label it like this, because now I have to I have to go into the chart and try to figure out. Okay, give me 1 second. I got you, dog. Okay. So let's see. There is a template in the room for submitting trades. Please use it in the future. I love doing this for you guys. All I ask is that you make my life a little easier. Okay, so look up in the files. There's a template. Go to the file section. Look at the template and please use that in the future if you don't mind. Okay, so you also didn't provide the time, which is also even more annoying, dude. Let's see. I started shorting, okay, 11:05, expecting a breakdown, and you got stopped out. I started scaling short versus day highs at 63.94. Okay, so 63. T triple Qs. Okay, yeah. Okay, I see it. And you got stopped out there. On something like this, I like to set my stop at day highs if I'm that close to it or above it. The problem here, dude, is, and I mentioned this in the room intraday, you're in a bullish context, okay? You're in a gap up off a falling wedge, okay? So until I see a ledge here and really weak price action, I'm not super interested in the short because this could go one leg higher, pull back, go another leg higher. For me, this isn't a super awesome setup. The clearest short was right here. Okay, you had your falling wedge, your failed two-wave corrective turned into a dumpling top, failure at the 2 minute or 5 minute 8, 2 minute 21, whatever you want to call it. There's your short. Okay. If you had set a stop above day highs by a couple of pennies, you probably wouldn't have gotten stopped out. I don't think this was a particularly high probability short. This could have easily given you a whole leg higher here. So that's yes, I think you should have had a wider stop, but I don't think the entry was particularly good, and I don't mean any offense by that. At least it's not an entry I would have taken. All right, we have another email here. So this is a good example of why technical analysis is not true. Okay, so let me. I'm trying to hide this person's name. All right, I penciled it out. So he says, so this is two good examples of why technical analysis is not trading. Following two trades, I had clear plan, but did not follow it. I got out too soon mainly because the market was weak and got spooked out of these on the market downturn when really there was no reason. On the chart, both went to reach my original target without me. Hopefully you can see green arrows making an entry with dark blue exits. I can't. Let's see. Okay, I see. Yeah, so Disney wedging there. This is, I believe, a 5 minute chart. Okay, yeah. This is you're you're writing the 5 and the 21 there. The 8 and the 21. You pop through this wedge, right back into, was this R1, I guess, on Disney. Yeah. So target R1, but spooked a spike. You get down to, so got out for a scalp at 116.80. It went through to my target. Yeah. Well, I mean, you have to know when to let trades work. Ultimately, it's very annoying, for sure. But yeah, No, that was a really nice setup. All right. Okay. I watch TRV frequently and it's very bullish on the daily. I took an entry at 225.85, front running the break of a tweezer top, preempting that it did that if it did go through the end challenge R1 at HOD, but again got out when the market got bearish and only for it to hit the target. Yeah. TRV, the Travelers Companies. Yeah. Your target was your target was the highs. Yeah. Well, it was nothing broken with TRV. It was just pulling back after a really nice bullish impulse move. So it's annoying, and I so this trader saying uh, two good examples of why technical analysis is not trading. Correct. There's a lot more to trading, right? Making decisions, managing risk, finding a good deal. All right, we got another question here. All right. My chart tells me Tesla goes lower, but I can't determine if this is a V or a platform or something else. I don't know. What are you referring to? The open? Tesla does a lot of V's every day. At A. This A right here? This one? Are you talking about this A or this A? At day lows? Okay, so this one. Okay. Yeah, so here is your power pivot. Okay, so this was your general area of support. And the question is, I can't determine that this is via a platform or something else. Uh, you don't know. You never know. That's thinking. Okay. Thinking that you know, and that somehow all this beautiful technical analysis. I mean, this is a beautifully marked up chart. Okay. Thinking that any of that is going to give you a substantial edge over whether this is a bear flag or a V in a platform is a fool's errand. Okay, you're gonna take shots at the market. Okay, you're gonna cover your risk, and based on based on a better understanding of supply and demand, you got to look at levels and say, okay, I got a bunch of buyers up here, a bunch of sellers here. I'm at a demand zone. Okay, so there's your two-wave corrective and your base. Uh, you know, a lot of the trades we take, man. I never know whether it's a curling wedge or a rising wedge that I'm buying. I'm buying the reversal. I finance my risk, and once the risk is financed and I have confirmation, I re-add risk, and re-add to the trade once I'm proven right. But there's no way to know when you're doing this whether you're buying the bottom of the apex of a not the apex but the little fulcrum point of a bear flag or a bear wedge here, or you're buying the bottom of a V, which is why V's are so hard to trade, unless you do what you can to finance your risk and mitigate a big downside, right? This is why if you're going to take these trades, money and risk management are everything. Okay, if you're wrong, you have a really small risk in this trade. If you're right, Obviously this was into the close, but if this was coming in on the morning, right, you have the potential for a big two-wave corrective here, and that's what we were playing this morning in Tesla, right? We didn't know whether Tesla was going to come in here and give us a full Angry Bird, right? We catch enough of these to the point where we're right on the initial move and manage our risk, and if we're right on the follow through, it's a nice big trade. If we're wrong, it's a scratch or a small win. But ultimately, it's just a matter of playing the probabilities until you hit big winners. There are obviously some odds enhancers, right? Are you near a demand zone? Are you starting to see oscillator divergence and price volume convergence? Are you deeply oversold on whatever oversold technicals you're using? Is the market bouncing or is it making lower lows? I could go on and on. There's obviously a lot of odds enhancers, but ultimately, I spent years trying to perfect my technical analysis skills, thinking that they would give me some further edge in accuracy, right? And you're gonna reach a point in your accuracy where you have a hit rate of, I don't know, high hit rate, 60, maybe 70%. You're gonna reach a level of attrition where you're gonna have to just work on this, man. Okay, you flip a quarter, okay, 100 times, okay, it's gonna come up heads or tails, X number of times. What you have to do at that point is make sure that you learn to manage risk and money so that you're adding to winners and respecting your risk, and that compounds your wealth enormously. Okay, some of the best traders I know have 40-50% hit rates. They're wrong all day long. They just don't stay wrong. So I think there's a temptation, and technically you already know what you're doing, but there's a temptation this is more for other novice traders in the room. There's a temptation to overemphasize technical analysis and think less about how to execute trades, so that you're letting winners work and mitigating risk as you're doing that, and adding when you're supposed to add and trimming when you're supposed to trim, rather than focusing on that key technical edge that's going to allow you to figure out and predict the future. That doesn't exist. Okay, unless you're Kathy, it doesn't exist. It's not a thing that I've ever seen any trader achieve. Do you guys know what Jim Simon's hit rate was? And he's the most successful trader of all time. Anybody know? Yeah, it was like 33%. 25 to 30%. Very, very low. Right? You don't have to be right all the time. You don't have to have crystal ball level technical analysis to determine what things are going to happen when. There are some statistical edges we have, right? And some indicators that are helpful. Beyond that, guys, just stay right when you're supposed to stay right. Add to winners and cut losers short, and you're gonna do great. Okay. Jim Simons, mathematician, American investor. There's a great documentary by him. I think it's called The Man Who Cracked the Markets. He was a mathematician who started dabbling in the markets and became one of the most successful traders of all time through algorithmic trading. Okay, he was right a third of the time. You ever use intrinsic volatility versus historic volatility? You've already lost me, dude. No. I use implied volatility. I look at gamma a lot. I like to know where expected moves are going, but beyond that, I don't need to have any of that to anything beyond that. When you get a chance, would you please go over your general swing trade approach, please? As an example, Dell swing trade from yesterday. What was the initial stop, target, scale out, adjusted stop, etc.? It'll help clear things up for me a lot. Thank you. Yes, T-Man. So we watched Dell gap up post earnings, right? And I said to myself, and I said to the room, selves, let's wait for Dell to come into an area that will most likely attract buyers. Okay, so we stalked the trade for like 2 weeks. We're just watching every day. Every day I'm hustling. All right, so we just watched this trade here. We thought maybe it was going to hold the 618. It didn't. It didn't hold the 50% retracement. So we anchored the 3 o'clock and breakaway anchors here. Okay, breakaway gap anchors, and we saw that they were starting to hold 105.12. So we went a little deeper. Okay, went a little deeper here, and this should start to ring a bell if you've been paying attention, right? What do we have here? Distribution top, redistribution, climactic selling, retest, 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 compression, right? Does this look a little bit like a Wyckoff type 2 accumulation schematic? Anybody? Yeah. Hold on. This is important. In every price cycle, okay, Dell was here, it gapped up, okay, it had a bit of a distribution top, a selling climax, it came in a range, okay, and then near the top of the range, it started to compress, okay, so this was it. On the daily, we said, guys, we're looking, signal-wise, we're looking at a Morningstar reversal. Okay, it's not technically a Morningstar reversal. I know that it's not a Morningstar reversal. I get it. You're plus 2 bars, but it's the same idea, right? Little shakeout doji into the anchor. Okay, and they break the pivot around 108.90. Okay, and we're going full Ricky Bobby. So we were watching the 15-minute and the hourly in Dell. Okay, and so this trade, okay, is based on the following thesis. Okay, Dell was a major earnings success. It's in a beautiful uptrend. Okay, it's now here. This top, okay, is stage 3 on the very short time frame. Stage 3 of the price cycle. Okay, so we're expecting a stage 4 decline, right, into an area that will act as an accumulation zone. So we let all this stuff transpire, okay, and then we saw that Dell was holding the lower anchor, okay. So in terms of the price cycle, this type of trade, okay, is a transitional reversal out of an accumulation base in a bullish context, right? So the context in Dell was already bullish, okay? The context in Dell has been bullish for a long time. You had a nice rounding bottom, cup, handle, pop, and then post-earnings gap. Okay, so In terms of context, structure, and roadmap, okay, context is bullish, right? Structure is reaccumulative, okay, and roadmap is higher. Okay, in terms of my methodology, that's what I was looking at. So, in simple terms, right, people who missed this gap up have been waiting, okay, have been waiting for sellers to be absorbed before Dell can resume its uptrend. Okay, so when we came in here, we were in a range. We got very tight here. Notice that? We got very tight. Buyers with the FOMC announcement finally take it through the level. I saw our alert go off. I immediately bought it, okay, because that's the breakout I was looking for. This break here of 109.02, okay, and I sold it this morning into the 114 handle. Make sense? Does that explanation make sense? Okay. How do you improve on reversals? For some reason, it is so difficult for me to confidently short. A lot of practice and good market reading skills. Reversals are difficult for a lot of people. I recommend you paper trade them, and look for a strategy that works. 70%. What's the question there, Pablo? Oh, that was on Jim Simons. Okay. Okay, so that I answered T-Man on the swing trades. JP says all I need is Kathy Woods and Kramer. LOL. How do you identify gamma with software? Amber, can you please? Oh, never mind. Question for Amber. You're awesome and highly appreciated. Okay. Any other questions I might have missed, guys? I'm trying to scroll through it, and if I missed any questions, let me know. No. Oh, there's a trade. No, I still got more emails to get through here. There's Harry's trade review. Okay, let's take a look, Harry. A very difficult day, Harry. All right, let's see. Trade loss. MES long pain trade. Okay. Entry 1042. Okay, so thank you for sending trades in a format that's easier to read. Okay. Yeah, okay. What was your target? I'm just curious. Harry, what was your target there? 53.25. Okay. So you were also looking for the ascending line on the yes? You were looking for the daily ascending line? Okay. All right. Did you take some off on that trade? I'm just you had 5 contracts. Did you finance your risk somehow? You did? Okay. So let's see. Entry, target, 1 hit to tick but didn't fill and stopped out. Oh, that's so annoying. Okay. All right. So this morning, Harry, the tricky thing with this morning, right, was that we didn't that was what time? 10:42. Okay, so 10:42. Okay. So this morning, Harry, we needed to see the market break and hold 53.21, 50, 53.20, 22. And remember what we said? Okay, yeah, it doesn't matter. Remember what we said? We said until these highs are broken and we're able to hold them, okay, there's no trade, right? 80% of the time, we stay in a range, okay? And unfortunately, there was not enough. There was not enough strength in the buyers today, Harry, to take us over 53.22 and hold the level. So you see it, little turtle poke here. Uh, it poked its head out like a turtle, and sellers batted the S&Ps down. I like what you did as far as a quick entry here. This is a beautiful pattern. Okay, I would have been selling half into this top, and setting a stop. If you set it at the lows, you're gonna break even on the overall trade. If you set it at your break even entry point, you're gonna make some money. But we had no guarantee today whatsoever that we were going to be able to go higher, and the market was already. I mean, it was coming off this move in the overnight session, right? Which is why I was saying, guys, careful chasing longs here today. Until we break these highs and hold them, the move to 53.28 is not guaranteed. So that's what I was talking about. It's annoying that you didn't get filled there on the second tier. I know you tried. Okay, so next trade. All right, trade 2. Long 2-minute inside bar breakout, 12:31 p.m. I think you mean. Where are you trading from? Since market has been an uptrend on daily, I noticed that whenever price hugs the 821, then usually there is follow through. I was wrong. $12.31. Yeah, you gave it a shot here. That's very annoying. Again, man, market's overextended. It was a tough day to be long. Okay. MES 2-minute. I tried to keep stop loss tight to keep my small after 2 red trades. How to improve counter trend mentality in trading. Like when stock is trending, if I miss the first entry, then every pullback I think is not a good entry, as there will be wave corrective down. Why? Why do you think this way? You don't know what's going to happen. Maybe a pullback just gives you a shallow 2-bar pullback. You don't know. You don't know that. Okay, so this was a short at 222. Okay. Entry. Yeah, you got shaken out by. You got shaken out there by a couple of ticks, right? I would have probably chosen this as a stop. This prior pivot low. You see that, Harry? This is the stop. That was a little too tight. This was a nice trade. How can I become a trader who is right most of the time except the last time, instead of being wrong most of the time except the last time? So you're referring to the common adage. Well, you took the right entry. Your stop was just a little tight here. That was a really nice scalp. So you're saying on reverse, if stock is trending down and I miss the first entry short, then I feel I can try to scalp long at support level, however it flushed. Dude, if you're trending lower, the counter trend long is so dangerous because you never know when bears are gonna hit the gas pedal. I think that's a really bad habit, very destructive habit. Stick with the trend. So overall, I thought this third trade was the best one you did. Okay, there was a much higher degree of clarity here. Okay, I want to highlight. Oh, I want to highlight the difference between these trades, because the third one is good. The first two ones, I mean, the quick scalp you took, I guess, was fine. This second trade is very risky. and low probability. Here, dude, you were trending lower with confirmation the market was going lower. All these highs were getting sold. Even this inside high got sold. So the short once the S&Ps broke 53.13 was a way better higher quality trade. The problem is you set your stop a little a little too low. Your stop should have been higher. How to change that? Practice, man. Practice and okay. Just zoom out, Harry, okay? This is the move the market just made, okay? The market just went from 52.35 and it was 53.14 or thereabouts at the open, okay? That's a massive move, right? The first thing we said this morning, guys, is I'm not gonna hit the gas pedal to the upside until the market breaks 53.22 and holds it. At no point were those criteria met when you were trying to anticipate this breakout. I said we have an ascending triangle, maybe it's going to go here, and it started to go, but it never held the pivot high, right? Versus, gave you a rounding top, then gave you a toboggan, and if you didn't trade that, it gave you a ledge that gave you another short. I mean, this is a confirmed channel here. This is a strong trade. You see what I'm saying? Here you have a confirmed downtrend. Lower high, lower high, lower high, lower low, lower high, lower low, lower high, lower low. Do you see the difference between this and this chop you were trying to take the breakout on? So that's what I mean that I think you need maybe to work on a little bit more, Harry, is identifying your criteria for high probability events. Here we didn't know this morning what we didn't know, right? We didn't know if they were going to break the ascending triangle and go higher. I distinctly remember here I said, we're nowhere near the apex of this ascending triangle. Maybe we get one more shakeout lower and maybe they take it higher. We didn't know, right? And they did shake out here, and then both couldn't take it higher, and then you had a lower high, right? By this point here, off this lower high, just price action wise, you knew this was the end of the line, right? So even if you'd missed the short this lower high and this lower high, right, you had a pretty good one here. Do you see what I'm saying? So yeah. That's generally why I like to give you guys a little bit of guidance in terms of what I'm thinking about the market. For me, the plan today was to wait, see if the market rejected lower levels. If the S&Ps got through 53.22 and a half, 22, then I was looking for that move to 53.28 and reevaluate. Never happened. So no longs. The only longs I took, dude, were in oversold conditions into closing pivots, Tesla and Nvidia, right? But to try to take breakouts after the S&Ps moved 100, 150 points overnight, it's very, very difficult. JR, do you short the lower high, or do you wait for it to start moving lower? It depends, man. It really depends on the name, on what's happening, time of day, the setup. I don't have any hard and fast rules about that. It really depends, EJ. TG on Dell. Why not finance your risk and hold for a bigger move versus exiting today? I'm looking at this as a low cheat entry, and stock is about to build a right side of the base, because I think I'm going to get another entry opportunity, TG, on Dell. On Dell, I think it's going to come back and retest. So that's what I was thinking when I sold it. So I'm guessing we're probably going to retest 113 again. It looks phenomenal for a retest of all-time highs. Also, I took some size on Dell. last night. I sold half on the pop, and I still had a lot of size this morning. And I had the big winners in NVIDIA and so on and so forth. So thinking, okay, this is probably going to pop and come back to 113. I sold it. But yeah, no, I think it's a super viable swing long to all-time highs. I really like the way it looks. I believe so, Tony. Yeah, we had all-time highs today. Yeah. Yeah, no, Harry submits great trade reviews. Always. Great questions. Anything else you guys want to go over? I'm happy to answer any of the questions. Do you use OTM options on your trades? I usually go at the money or in the money. If I'm doing some crazy lottos, then I'll go out of the money. But other than that, I stay in the money or at the money, depending on the volume and the open interest. Mm-hmm. Would you recommend it just for very short plays? Would I recommend what? Options? No, I don't first of all, I would never recommend options trading to anyone specifically. But what I'm saying is, if I think there's a big potential catalyst ahead, right? And say it's Tesla, and out of the money calls are cheap, and it looks like they could really appreciate quickly through a strong spike in implied volatility, I'll take some out of the money lottos. But for day to day trading, I like to trade in or at the money. Do you scale out of technical levels that are. Yeah, so typically, T Man. So typically, like NVIDIA today, you know, I'll typically look for something. You know, we entered around 907. Stop was at day lows. First target was VWAP. I typically exit half my position around 2 times my risk, and then I can be a little impatient sometimes, especially when I'm flush with cash, and I just want to go get a cup of coffee. But my secondary target was on the video was about 4.5 to 1, right there. So I'll typically, I like to finance my stop at 2 to 1, always. Okay, so that was VWAP right here. Okay, more or less, and then once that's happened, and risk has been eliminated from the from the equation. Okay, then I have a lot of decisions I need to make. Is this a trade I want to add to? In this case, absolutely not, because the market, there was no momentum in the market. This was a technical bounce. So in terms of my decision tree, right? Here's my entry. Okay. Do we reach 2 to 1? Right. If no, exit. Right. Take a loss. If yes, right, take half. At that point, okay, does it reach secondary target? If yes, take a quarter. If no, usually trail out. Once I've taken that quarter out, here, usually on that pullback, if I have a two-wave corrective and it's bullish and it's channeling, sometimes I like to add to the trade. If it's a breakout that's trending, I will add on the first pullback for sure. Once I know I'm right, I'll add to that first pullback and take much bigger size. In this case, because it was a technical bounce in a weak market, okay, and I was just playing, there were people short covering here at the closing pivot. They were buy the dippers, buying the closing pivot. I wasn't looking to add to this trade because I wasn't really convinced that past R2 that they were going to be able to take out day highs. right? This is just a technical bounce type of play. You know what I mean? So it depends on where we are in the price cycle. Nvidia tired today, right? Had a huge gap up into a double top. This first bounce very likely to work. After that, I'm not expecting Nvidia when the market's iffy at best, you know, making all-time highs, tired after a big move from yesterday. I wasn't expecting Nvidia to do this just yet. It could have, but that wasn't really what, you know, what I was expecting it to do. How is your target determined? Is that the strike price? No, my targets are determined uh, at levels where I think sellers are most likely to be. Right? That's, you see this big red line here? I'll make it thicker so you can see it. Okay, this is where we determined sellers in Nvidia were most likely going to be today. Right? Kind of end of the line. And we weren't far off. Right? You came in once, failed, tried again, failed, failed again, and that's your head and shoulders two-wave corrective. See that? So my targets are always based on where I think sellers are going to be and what the potential of the trade is. Make sense, Ace? So that was the idea there. Is Nike getting hammered? I haven't even looked. I'm not seeing any news for PayPal. Alright, good deal. What else, guys? Anything else before we call it a night? I'm a Copenhagen man, personally. So, word up, son. Do you have swing trades? Where can we see the info? Right here. My swing trade holdings. This is our list of swings right there. Active swings. This is what we got on right now. Can I explain that graph? Not really, bro. I don't know what. I don't know what this is. Like, can I explain what? That's a volume profile overlaid over overlaid over a chart. I'm not sure. The oh, okay. I understand. I'm sorry. Yes, I understand what you're saying. So this is a volume profile, okay, and this is your buying selling volume at each price level. So it's volume of price, okay. So say for example, I want to see volume at price in the S&Ps from here to here, okay. I'll see that we have kind of a split profile, okay. You have your yellow and blue volume, okay. Let me show you here. This is value area down, value area up. Point of control is in red, okay, and value area high and low. So you have your up volume, your down volume, okay. So the yellow is the down volume, the blue is the up volume, and this is the amount of volume at each price level. Okay, we did a talk that's in the portal called Determining Price Levels that goes heavily into how the volume profile affects price itself. So this we call the bottom of the market in the SPX. Remember that, guys, when we went long in November, long the market in November. Okay, this is your volume profile from January of 2023 to November of 2023, right? So your year-to-date volume profile where was the most traded amount of volume? Right here, 42, 42, 40. Sorry, 41.20. Remember that, guys? So that gave us a very good idea on this pullback. People thought the world was going to end and everything else. We say, guys, the market's very likely going to bounce around these levels, right? We talked about this for weeks in the room and got ready to buy the market. Crushed it. Crushed it all the way into December. How to read it? I recommend you. Does anyone have that talk? It's on YouTube and it's on our portal. Determining price levels. There's a whole tutorial. Yeah, we use it for entries and exits all the time. Guessing. I mean, how often do we use volume profile to determine exits in the room, guys? You can answer our esteemed guests. I would say 5 times a day, every day. It's a very, very useful tool. Every single chart. It's not, there's nothing magical or phantasmagoric about it. You're just looking at a segment of price action here, and you're determining where the most amount of price was auctioned, right? And that'll give you a good idea for where to expect liquidity, right? That's all that is. If you take Momentum Mastery, we discuss volume profile in depth. It's at least 2 or 3 hours of in-depth volume profile discussion. So you, if you take it, you'll get a lot of that. Doing little in the middle, 100%. All right, good times. Great questions. Anybody else have any other questions before we call it a night? Oh, we're including the course for free. Wow. That's very generous, Amber. Can you go over how you use the 5 and 80 MA with your VWAP when you're entering trades? Yeah, seriously. It stays between us. Yeah, so the exponential moving averages, Deepak, are only helpful in as far as you're watching a trend, in my opinion. Okay, so say you're on the 5-minute time frame, okay, and you're using these moving averages as guideposts. They're like rubber bands, right? When you're trending, typically in tight trends, the moving averages will be sticking very closely, and they're a good guidepost for when pullbacks are likely to work. You see that? Moving average retest, moving average retest, moving average retest. Now, you can see a clear change of angle of ascent here, right? But, moving average is super helpful when you're trending. When you're going sideways, it turns into spaghetti salad, right? Because you're no longer maintaining a clear angle of ascent, and because the moving average is basically an average of price at time, then the spaghetti gets all twisted. So you want to use it in trending markets, and it's very helpful. Is it necessary? No. I know a lot of people who trade without moving averages. Personally, I think they're missing out. I think they're helpful to have. Are they the end all be all of trading? Absolutely not. Great questions. Good stuff. What else we got, guys? Anybody join our room yet? I wonder if we have any guests who decided to join the family, Eddie. If you join today, you get a special taco delivery in person from Eddie, by the way. Which date do you set up for the VWAP? I have an intraday VWAP. Thank you, Hillary. Just let Eddie know what kind of salsa you like. It's $1.25 extra for guacamole, by the way. Don't blame Eddie. Chipotle started it. 100% she's in Alaska. Doesn't matter, Eddie. I said it. The anchored. Oh, there you go. You got a new neighbor. The anchored VWAP. I will refer you to our discussion on anchored VWAPs. It's somewhere in our in our archive, if somebody could point um, uh, our esteemed guests here to our VWAP discussion where we talk in depth about where we answered, where we anchor VWAPs, that would be helpful. Typically, VWAPs I like to anchor at igniting points in a sequence. Okay, so like Zscaler on the daily. Okay, your breakaway gap. This was. I'm gonna delete some of these because they're no. That's okay. Actually use them. So your breakaway gap and the pre-earnings gap, right? You anchor these. You can buy the first test of these VWAPs very reliably. Bounce, pop, bounce, pop, and then once you're in a range, then you go for the next high volume bar, and you create a new VWAP pair, and you see how within a trend, you can very clearly predict. Once you have a major igniting sequence, you can start to predict where buyers are going to come in and defend the level, right? There it is. Thank you, Amber. Yeah, my pleasure. Gaston's TH. All right, cool deal. My pleasure. Did you guys have a good time? All right, TG pop quiz. What's on your watch list? I'm giving TG a hard time because he's a friend. What's on your watch list, bro? Top 3. Go. Nothing? Wow. Cold. All right. That's it? Bro, you're usually like a cornucopia full of trade ideas. 4-star. Strong chart. Strong. Looks good. Yeah, I have Dell and ATMU already. I think you may have given me ATMU, T-Man. Been tough the past few weeks. Yeah, it has. Hopefully we consolidate here a couple more days, fill in those gaps, build new bases, and go off to the races, man. I got a feeling we might really be ready to rip another 100 points. Thoughts on USD JPY on 10? I shorted it, the 10 tweezer top. So USD JPY. Yes. The old dollar yen. I mean, it depends on your time frame, dude. This looks incredibly bullish to me. This is the cup and handle to end all cup and handles. And, you know, life gives you lemons and the end to negative interest rate policies, and you make sashimi, I guess. 163.49. Thereabouts. Very strong chart. Looking for a major breakout in USD JPY. Okay, gotcha. Oh, so you're trading that on like the 5 minute or 10 minutes, something like that? Yeah, I could see it coming in lower, perhaps. Yeah, I don't, I don't trade that much forex, and when I do, I don't mess around with counter trend trades. Apple, 151.39. Yeah, I was gonna say, my target would be 151.226, something like that. Could definitely come there. Apple, says DC. They keep the doctor away. Oh, brutal. That's like the horror movie. You open the closet, body falls out. Holy moly! It's like the earthly remains of Tim Cook's iPhone. Uh, I don't know, man. A lot of people want to buy Apple on discount at 165.90. You know, a couple of weeks ago, when Apple was at 169, I was telling Eddie I had to fight the urge to buy Apple at 169 for the pop back to 182. And while I would have made money, I'm glad he talked me out of it because it's not looking so good. Not looking so good now. So yeah, yeah, yeah. I mean, it's like shorting a mutual fund or a bank. Apple is much more than a tech company. It's a financial institution. So, and it's a very solid one. Uh, uh, you know, it would have to crack 166, hold underneath the level, wedge up on low volume, and then fall again. And I feel like there's just wait for Elon to say something stupid and catch 20 points on Tesla. You know what I mean? That's a hard. That's a hard short. That's all I'm trying to say. Hard short. You shorted Apple today, Andrew? Yeah. No. It looks lower. I just. It seems like a really hard short to me. There's an army of retail traders and institutions whose sole purpose in life seems to be buying the dip on Apple. So, like, why? Why trade Apple to the short side? Doesn't seem like an awesome idea to me personally. You know. So yeah. All right. Well, excellent. We'll be back tomorrow, guys, for the open around 9 a.m. Thank you. Why the frowny face, DC? I'm sorry. Did I say something you didn't like? I didn't mean to offend you. Uh, it just seems like a hard short. That's all I'm saying. Thank you all for sticking around this long this week. It's been a pleasure having you. We will be concluding our open house tomorrow. Again, thank you to Eddie, Amber, and David W. for keeping things together while I go off the rails. Tomorrow is our final. Yeah, seriously, come on. A little hand of applause. Tomorrow will be our final market watch us. If you have any questions, shoot me an email. If you need any help signing up or have any questions about that, ask Amber, and we'll be back in the morning. Love you guys. We'll see you tomorrow.